The IPO plans of large microfinance institutions have been dampened with the recent developments at SKS Microfinance and the controversy surrounding the corporate governance issue at the company and plans for more regulations.
Well, MFIs are now banking on investments from private equity players. Analysts, however, say that raising capital will not be easy with all the uncertainty that's currently surrounding the industry.
With the microfinance industry boasting of a loan portfolio of 30,000 crore rupees and penetration of just under 10%, companies are desperately looking to raise capital for growth. Following the success of the SKS Microfinance IPO a few months ago, an IPO was looking like the best option, giving enough capital to scale up quickly and an exit route for private equity players. But with the microfinance industry now under the regulatory scanner, companies are delaying or shelving IPO plans.
Realistically speaking, one can expect a bit of slowdown from that activity. Our model with Basics has proven to be a time-tested model, and we continue to see interest in this. We expect to continue our process as the business grows to support it with equity infusion from the markets.
Bloomberg UTV has learned that at least 4 big MFIs which were contemplating IPOs have now put the plans on the back burner. Spandana planned to raise over 1,500 crore rupees. Share Microfin planned to raise over 1,000 crore rupees post the merger with Asmita Microfinance. Basics and Equitas also had plans for IPOs. Private equity investment is back in favor with MFIs, but analysts say raising capital will be difficult for microfinance companies.
We should understand is that these IPOs are meant to provide exit to a lot of PE investors who are already invested in the company. And the PE investors who are looking to maximize the value of the invested money would not advise these companies to go in for the IPO at this juncture, despite a booming market, because of the lack of clarity that we see.
Apart from equity, MFIs have raised 80% of debt from banks. Now with banks turning cautious to lend to the microfinance sector, MFIs are forced to look at other debt instruments which include ECBs and NCDs. But sources close to the industry say that the recent developments within the industry have increased the cost of borrowing of these instruments by 100 to 120 basis points. Vishnath Pilla, Bloomberg UTV, Hyderabad.